Welcome back. We're going to now do a third quarter earnings call with the top management of Escorts, the Group CFO, Bharat Madan, joining us right here on the channel. Good morning, sir. If you look at your sequential performance quarter on quarter, we do see that the net profit is down by about 28%. The press release, in fact, had the chairman and managing director, Mr. Nikhil Nanda, saying that the tractor industry has been impacted due to a high base effect as well as a late harvest of the kharif crop, which has also impacted the rural economy. I think the first question that our markets would also want to know is that does Escorts think the worst is behind it when it comes to this rural impact, and therefore things are only going to get better as far as earnings go going forward?
Hi, thanks and good morning. I think as you've seen, I think the retail demand in the tractor industry has been slightly on the lower side. I think in the last few months we've seen the trend, especially the last 2 quarters, have seen some correction happening. And obviously the expectation was the festive season will be quite good. So that's why I think the inventory levels have also been quite high with the channel, which is the reason I think now we're seeing some correction happening. So the retails are not going down that much, but I think the wholesale numbers will continue to have some pressure early in this quarter too. But we expect, I think, from next fiscal, I think the things should start improving. Though in this year we're expecting the industry may see some sort of decline, maybe mid-single digit sort of decline will be there. But given the high base of last year, we think it's still a good number, and maybe next year we'll see the rebound happening in the industry and we'll go back to the last year's level in the industry volumes.
Okay, so that's the guidance that you can give us, and maybe for another 2 quarters this is going to continue. So then what is happening at the back end with respect to manufacturing? I don't know what your inventory levels are like. Will you ramp up production? Is it the shortage that has globally been seen a disruption because of manufacturing, the chip shortage, is that all behind as well?
Well, on tractor industry, we don't have major impact on the chip shortage. Yeah, there are certain models which are impacted, very, very selected models, so it's not in a major way. But yes, as you mentioned, I think on the inventory level, since there was enough inventory level, even though we still have about 4 to 5 weeks of inventory with the channel partners, against the normal level, which would like it to be in the range of about 3 weeks. So which is what I think we're looking at in the sort of correction happening in these numbers now. But hopefully, I think that is core trend, so that should be behind us. And as you mentioned, so I think we should see the revival coming back in the industry, because all other major factors for the rural market are intact. So the water reservoirs are good, so the crop prices have been holding up, and the rabi crop is sowing has been very good, so harvesting is also likely to be good. So I think on the agriculture front, generally, we don't see a major concern, and we see I think all those factors will hold good next year too, which can actually give you some rebound in the industry numbers.
Okay. How does life change after the change of guard? Everybody is curious to understand in terms of internal operations, technology, synergies.
Well, as you know, the transition is not yet completed, so I think we're still in the process of seeking approvals from the regulators. So once we get those things, and we expect, I think by say end of March, we should be through with this deal, and we'll have the joint promoters coming on board. So the plan is we'll be jointly working on a midterm business plan for the business for the next 5-6 years. So which will lay down the roadmap in terms of what the company will go through, in terms of what tech changes, the new product introduction, the new areas we will get into, what sort of investment will be required. So I think all that will have more clarity. So maybe by June, July, we expect we should be ready with that roadmap along with Kubota, and we'll be able to maybe give better guidance at that time.
How big could be electric tractor business for you? I mean, since everybody is talking about electric scooters, electric cars, is electric tractor worth the effort? Do you see that becoming a reality? Why I'm asking you this, because we're talking about cars, but nobody is talking about electric trucks. It's still a distance away. Do you think getting EV tractors is still a distance away and making them commercially viable?
As you all know, I think Escorts is the first one who has already started supplying electric tractors for the export market. We're not launched it in domestic market, even though our product has been approved first in India. So we are still awaiting some technical hitches to be through. But for exports, we already started working on this. We're exporting to US and European market now. And the numbers have been ramping up, and we got very good inquiries, from certain distributors in hand now on those products. So in India, obviously, there are still some challenges. I think, especially on the pricing side, even though the total cost of ownership makes sense to go for electric tractors, but given the infra requirement and the initial investment that will be there from a farmer's perspective, I think that's a problem which is still to be solved. So we expect things will actually improve, and once I think there are larger players who are coming into the, especially the battery part, so we'll see I think the costs also coming down, and maybe the affordability will increase, and this sector will also see definitely a big push in future.
Perhaps down the line we will see some traction on that front. But Mr. Madan, good morning. Let's talk about your overall market share geography-wise. You spoke about international markets, but there has been an underperformance back home in the north as well as the eastern markets, and that seems to be hurting your overall market share. Perhaps that's been mitigated by what we've seen in the south and western regions. So break it up for us in terms of the market share geographically and where we can see an improvement or a recovery even come in.
Yeah, you had seen, I think the monsoon was quite good in the southern and western areas. So actually those pockets had seen good growth numbers. So if you look at the market share drop, I think more than 50% region will be attributed to this geographical distribution of rainfall and the growth disparity which happened. So especially in a stronger market in the north and central India, in the initial periods, especially in the first 2 quarters, there's a major degrowth. While the southern market, we are not very strong there. The growth was very high. So even on YTD basis, we have seen the growth has been obviously much higher in the southern western market. So that's the reason actually for losing some of the market share in this period. But now I think with the Rabi season on and the sowing is good, which is very good period for our stronger market. So we expect the recovery will start happening. So we're quite hopeful. I think from this quarter onwards, we'll see the market share also start moving up in the way we were earlier.
Can we then assume that even the market share trajectory, which over the year-on-year basis has seen a decline now at about 13.5%, that too will stabilize, and will you be looking at any more hikes given the fact that tractor prices are up roughly 10% in the last year?
Yeah, so I think as we have seen the margin front, the major impact is happening because of the very steep increase in the commodity prices, and this is something which is unprecedented and seen almost 18-20% cost increase happening on the material front, which has never been seen in such a short period. So the industry is not used to these sort of changes in the material cost and the frequent price increases which we have been taking, in the market. So that is also something which is impacting the demand and also pushing pressure on the margin. And as we exited Q3, we are still carrying some lag, which is still to be passed on. And normally we pass on the price increases to the suppliers with the lag of a quarter. So if you see some impact of inflation that will come in Q4 too, basically we'll have to take another price increase sometime in the next fiscal in the first quarter to really offset that. But generally now we're seeing the commodity prices are stabilizing with it. So we don't see a major pressure there the way we've seen it in the last 1 year. So hopefully from next fiscal, we should be back to our normal margin levels, which will be in the range of 18% for the tractor business especially. At the company level, maybe show something around 13-14%, which is there. So we'll be back to 15% plus levels.
Appreciate your time and glad you could join us. I'm going to change gears and connect with Yasser Ravji, Managing Director and CEO with Glenmark Life Sciences. Yasser, good morning. Thank you for joining us. Throw more light